We are going to be joined in for and discussing TD Power. The revenue was up about 12% in this particular quarter, with EBITDA growing by about 18% as well. Net profit also showed a very strong growth, coming in at 26% growth compared to the same time last year. To talk more about the Q2 performance, as well as what is the outlook for the second half of this fiscal year, we are now joined by Mr. Nikhil Kumar, the MD of TD Power and Systems. Good afternoon, sir. Thank you so much for joining us today, and season greetings to you and everybody at TD Power. I just wanted to ask about your Q2 performance as the first question. You had a very strong Q2, and you have revised your revenue guidance as well from about 1,250 odd crores to 1,275 crores in this particular quarter in terms of revenue. What's leading to this, uplift in guidance, and how do you see this performance going forward as well?
Yeah, the reason for the uplift in the guidance is due to the higher order inflow that we have experienced in the quarter. We've had a 41% increase in the order inflow in Q2 this year compared to Q2 last year. And H1 to H1 basis, the order inflow has gone up by about 33%. So about 73% of our order inflow has come from the export market. So we are seeing very strong demand overseas for our products, for our generator products, especially in the gas turbine and gas engine segments, to a lower extent in hydropower plants. And our factory is completely right now booked out until for the rest of the financial year. And so therefore, based on definite order booking, factory loading, we have committed the higher guidance.
Hi, Mr. Kumar. This is Anushi joining in. First of all, wish you a very happy Diwali for this.
Happy Diwali.
Happy Diwali. Yeah, my question is on the strong set of numbers now that you've revised your revenue guidance for this year. Can we also expect a long-term guidance revision on the 17 to 18 growth that you've given for the next couple of years, considering that you've upped your FY25 guidance?
Yeah, it's a good question. See, we gave a guidance earlier saying that we will have a compounded growth year on year of 17 to 18%. Now, last year we did 1,000 crores, and now we're saying we're going to do around 1,250 crores. So there's already a 25% increase in the sales compared to last year. Next year's numbers are going to be better too. And we are going to give an upward revision of our next year's numbers when we have a conference call in February. I'll have a fix on next year a little bit better because we'll come closer to the beginning of the year. But the way that the orders are flowing in, the way that the market is, the market is so strong for us, we will be happy to revise our numbers upwards.
Absolutely. We look forward to the February performance to determine whether you've upped your guidance or not. But coming to the margin profile also, now you've reported about 18% of margins, and you expect that the the EBITDA margins growth would be 2 to 3% higher than the sales growth. While you did see an increase in gross margins, what are the other factors, what are the other key drivers that is leading to this operational leverage that we are looking at for TD Power Systems?
Yeah, we have been investing in automation over the past years quite heavily. We've been, putting robots and automated machinery in different parts of our factory, trying to improve the throughput with less people. So, as the sales has gone up, we have been able to deliver more without added investment, and therefore we're seeing the results of this 2 or 3 years of concerted effort of trying to automate the plant. That is leading to operational leverage. Earlier this plant could only deliver something like 700, 800 crores of output. Now from the same plant, we're getting 1,250. So that's a huge improvement in terms of output, which is leading to really great EBITDA margins.
All right, so EBITDA margins will also continue to remain on the healthier side. Now coming to the order prospects of the business, so 73% of your order inflows that we have seen in the first half are from the export side. I want to understand which are the key geographies which are leading to this growth, and for the next half, what is the kind of order inflows that one should expect for, and where do you see this order book in the next 1 to 2 years?
So the geographies are the US market. The US, for us, the gas segment is very strong. I mean, a gas turbine segment and gas engine segment is really strong, mainly driven by the US market and the European market. Of course, in the US market, the factors are different. The European market factors are different. The US is driven by a big upsurge in demand due to big investment taking place in data centers, cloud computing, and artificial intelligence server farms. All these server farms require huge amounts of power, not just backup power, also primary power. So our machines are going into this application. In Europe, it is the energy transition. So we're seeing a lot of power plants coming up with gas, which is waste heat recovery, replacing nuclear, and so this is also driving the demand in European countries. Overall, we see a very strong outlook. Our OEM customers have given us a forecast for next year, 25, saying that please significantly be ready for huge increase in output. And we think that this is going to go on further because there's a structural change taking place in the market, and we have the right products for this particular change.
Right. So while export picture, we have seen a significant growth from the areas that you've mentioned, the domestic growth on the other side. Q2, it was flattish, and Q1, we've seen a decline in this performance. So considering exports plus domestic, what is the kind of mix that one should be looking for forward, and what is the outlook that is building in for the domestic markets in terms of order inflows?
So we're seeing a slightly better situation in the order inflow for domestic in Q3. Although, we have said that in the earnings call, which I took 2-3 hours ago, I have said that the order inflow for Q3 will be better than Q2. At the same time, we are seeing a small revival, taking place in the domestic demand. I feel that what happened in Q1 was an aberration because of elections. Q2 numbers have been mainly flat. Q3 numbers are now going to be going up once again. But overall, the ratio of export to domestic for TDPS will be somewhere in the region of 2/3, 1/3, 2/3 exports, 1/3 domestic. It could be 70%, it could be 68%, 67%, somewhere around that.
Right, so 2/3 and 1/3 is the mix that we should be looking forward to. Well, that was my final question. Thank you, Mr. Kumar, for joining in and sharing your outlook.